So it is a big week. How are you feeling about it, given the magnitude of earnings?
Well, Scott, we think that the two big stories in the market, which will continue to be the two big stories in the market, are the strength of the economy and the strength of earnings. Even though consensus has come up quite a bit over the last number of months, we don't think they're really fully reflecting yet the potential of economic growth this year. At BofA, our global research team is now up to 7% this year and 5.5% next year. And if anything, I would tell you the risk is to the upside, not the downside. And then the translation through earnings, same story. So I think right now we're at 185 for this year in the S&P, 205 for next year. But if you extrapolate what we're seeing so far in the first quarter, to your point about the importance of the earnings reports, we're running well above 185. So we're in a new world with the amount of liquidity, with over 50% of GDP coming from fiscal and monetary policy, with money growing at 27% year over year. Everyone's scrambling to translate what's that going to ultimately mean. And we still think there's upside to the numbers, both in the economy as well as earnings.
I mean, you're looking at, you go 185, you're looking at a 24 multiple-ish on where some of the projections are. But what about the flip of that? Yes, agree with you 1,000%, right? Everybody seems to be bullish on where economic growth is going to be. The question is this as good as it gets, right? And that's what sort of David Kostin is talking about today over at Goldman, where he says domestic growth is peaking and forward equity returns are likely to be a modest one, with 3% gain in the S&P 500. That gets you to the year-end target of 4,300, right? It's not much higher from here, but okay, what if this is as good as it gets, Keith?
Well, I think it's a question of, we think in the second quarter, you could see a 10% real growth number. You can see close to that again in the third quarter. That gets you to the 7. Once again, I think we can be higher than that, Scott. But the key is not just what's this year going to look like, it's what's next year going to look like. And if we can get a 5.5%, 6% growth on top of this year, you could see some very powerful earnings. And it's not to say that the market's going to go straight up. I mean, we agree. We're not forecasting more than 4,300 this year. We had said, 42, 4,300. We're already up over 11%. So it's been a good year. We'll put some more on top of that. And then if next year, depending on where the earnings come out, if you can get another, if you get 205, 210 next year in earnings, you put a 21, 22 multiple, you kind of get close to that 44, 4,500. And again, it's a nice increment off this year's strong performance, add another 1.5% of yield. It's not a bad place to be, especially relative to the alternative.